Hello friends, welcome to another session of ACE Accounting series. Now today's topic will be Accounting for Share Capital Part 2, where we'll be discussing about the forfeiture and reissue of shares. So let's start and learn about how to pass the journal entries in the books of a company when there's forfeiture and reissue of shares. So first question that we'll be learning from is record the journal entries for forfeiture and reissue of shares in the following cases. X Limited forfeited 20 shares of Rs 10 each, Rs 7 called up, on which the shareholder had paid application allotment money of Rs 5 per share. Out of these, 50 shares were reissued to Naresh at 7 rupees per share paid up for Rs 8 per share. So now here, what are the points that you have to absorb? I will highlight first. First thing, how many shares are being forfeited? The number of shares forfeited is 20 shares. What is the par value of those shares? It is Rs 10. What is the called up value? It is Rs 7. Still 3 rupees has not been called. And now on which shareholder had paid application, what has been received so far on these shares? It is application and allotment money of 5 rupees has been received. Which means although company has called up 7, only 5 has been received. Which means 2 has not been received. So this implies not received is rupees 2 per share. And then there has been reissue. Now how many shares are being reissued? Not the entire 20. They have said only 15 shares are reissued. And it has been reissued to Naresh as Rs 7 per share paid up for 8 rupees. So here is where the children, you can go wrong. They are issued as 7 rupees per share. So the paid up value they are going to consider as Rs 7 per share. But it has been issued for means it is reissued and amount collected from the new shareholder is Rs 8 per share, which implies they are collecting 8 rupees but saying it is as if the new shareholder has paid only 7 rupees. So that extra 1 rupee is the premium that is being collected from the new shareholder. So this is where you can go wrong if you consider it ulta. Then you would have thought the shares were issued at discount, but that is not so. Read the wording carefully in this part to see what is the value being collected and what is the value which is being considered as paid up from the new shareholder. That makes a lot of difference. Here for 8 rupees means 8 rupees is collected, but considered as of 7 rupees is paid means 1 rupee extra being collected is a premium. And one more point you have to remember is that all the forfeited shares have not been reissued. So you will have to calculate the amount to be transferred to capital reserve. For that we'll use the formula total amount which is credited to forfeited share account in the forfeiture entry divided by total number of shares forfeited into number of shares issued. That we are basically trying to find out the proportionate amount of the forfeited share account balance in respect of the shares reissued. So here basically if there was discounted reissue, then that discounted reissue has to be subtracted from this value. But in this example, there is no discounted reissue. So that portion we can ignore and we'll take only this part of the formula for computing the amount. So whatever is the amount credited in the forfeiture entry, that will be divided by 20 multiplied by 15 and we'll get the proportionate amount to be credited to capital reserve. Now with this in mind, we will start passing the entries. So grab this information, keep it ready, note it down in the notebook and we'll start passing the entries now. So first entry that we are going to write is for the forfeiture of the share. So it is going to be share capital account debit. When the shares are forfeited, the number of shares are being cancelled out, so we are debiting share capital. And that would be for the number of shares forfeited into the called up value. What was the called up value? We have already noted down. Check your notes. The called up value was 7 rupees. So 140 rupees. 2. Share forfeiture account. Whatever has been received so far on these 20 shares. What has been received? They said 5 rupees application allotment money has been received. So whatever has been received, that is credited to the share forfeiture account 100. And what is not received would be to that call account. So in this case, final call has not yet been made. Application allotment money received, which means it must be the share first call which has not been received. So not received amount is going to be 20 into 2 rupees. Because 7 rupees have called up, 5 rupees received on application allotment, the difference 2 rupees would have been the amount of first call which was not received. So this is for forfeiture of 20 shares. And then we will be passing the reissue entry. In the reissue entry, they have been reissued 8 rupees being collected. So bank account debit. How much? 15 shares are being reissued, not the entire 20. Into how many rupees? 8 rupees. So 120 rupees is being received. But what goes into the share capital would be the paid up value. They are considering that as if 7 rupees is paid up. So 105 goes here. And the extra 1 rupees that is being collected is premium, which has to go into securities premium reserve account. That is 15 into 1, 15. This is on reissue of 15 forfeited shares. And finally, the third entry would be share forfeiture account debit to capital reserve account. This is for transfer to capital reserve. Now, what would be the amount? I told you that formula. What was the amount credited to the total amount credited to forfeiture? Share forfeiture account in the forfeiture, that is 100 rupees, divided by total number of shares forfeited 20 into the number of shares reissued 15. This will give you the amount. So 75 rupees, 25 into 3. So 75 rupees is which will get transferred into capital reserve. So these are the important points that you have to keep in mind. Here it is the called up value. Here it is the amount which is received, which is credited to share forfeiture account. Not received is credited to that particular call account. Whatever has been received would be debited to bank. Extra amount if received over and above the paid up value, that is to securities premium reserve. And when you have to transfer from share forfeiture to capital reserve, be sure that you use that formula to find the proportionate amount, because all the forfeited shares have not been reissued. I hope the concept is totally clear to you. Let's do one more question. A little different. Y Limited forfeited 90 shares. So how many shares are forfeited? 90 shares. What is the par value? Of rupees 10 each. So par value is 10. Rupees 8 called up, issued at premium. So they have been issued at premium of 2 rupees. 12 rupees was the value of that share it was issued at. And 8 rupees called up. So what has been called up so far? Rupees 8. To R for non-payment of allotment money. So failure was at the allotment stage. And this was the stage where premium was included, allotment of 5 rupees per share including premium. So it was 5, that is 3 plus 2 premium. So this premium amount was also not received. That is the most important point that you have to note down here. Then they have said out of these reissued 80 shares and they are reissued to Sanjay as 8 rupees called up for 10 rupees. So what they are considered called up value is going to be 8 rupees. But what is being collected here? 4 rupees 10. So extra 2 rupees is the premium being collected here. So here when initially they were issued also there's premium, reissue also there's premium. You have to be careful about this. The thing is that when there's a forfeiture of share and those shares were originally issued at premium, you have to clearly identify whether the premium amount was received or not. If it was received, then there is no reversal of the premium in the forfeiture entry. But if the premium amount was not received, which means if the failure to pay the amount which resulted in forfeiture was at that stage when the premium was supposed to be received, then we can say that company has not received the premium. So when it is not received premium, you will have to reverse it premium in the forfeiture entry. So in this case, the amount of premium of 2 was included at the allotment stage and the failure also was at the allotment stage. So this premium of 2 rupees has not been received. So having not been received, what are we going to do? We can reverse it. Okay. So now, and again here one more point that you have to remember is that all the shares forfeited has not been reissued. So I'll write down the formula once again. The formula so 2 points that you remember is reversal of securities premium reserve in forfeiture entry. Second would be reissue is at premium. And the third point that you have to note is that transfer to capital reserve, you should use that formula to calculate the proportionate amount. The formula is total amount credited to forfeited share account divided by total number of shares forfeited into number of shares reissued. For this question we can stop here, but if the reissue was a discount, unlike in this case it is a premium, then you should subtract from this amount the discount on reissue. So in this example only this particular formula part would be relevant to find out the proportionate amount which is in the forfeited share account. So now let's solve this question. I hope all these data has been noted down. We'll start the entry. The first entry that we have is of the share capital. Forfeiture share capital account debit. How many shares forfeited? 90. What is the called up value? 8 rupees called up. So 720. Securities premium reserve has to be reversed because that was not received. The failure was in the allotment stage. So 180. 2. Forfeited share account or share forfeiture account. What was received? 90 into 5. What was not received? To share allotment account. 90 into 5. So 450, 450. This is the being shares forfeited. For non-payment of allotment money. Next entry is for the reissue. Money is being received, bank account debit. But only 80 shares are being reissued. And it is, what is the amount being collected? 4 rupees 10. So 10 rupees collected, 800 received. But what goes into the share capital would be the called up value. They have said were issued as 8 rupees called up. So 640. The extra is the premium collected. We have to credit to securities premium reserve account 160. So this is for reissue of 80 shares. And last entry would be forfeited share account debit to capital reserve account. So the formula we'll use it here. What was the amount which was credited to forfeited share account? Totally the forfeiture entry 450. But for how many shares? 90 shares. How many shares reissue? 80. And there is no discount on reissue. This reissue at premium. So we stop here. We get the amount. It comes to 50 into 8, 400. So 400 is the amount which would be transferred to capital reserve. So this is how you pass the forfeiture entry. So here the uniqueness of this question, we learn these concepts that when securities premium reserve is not received, it is going to be reversed here in the forfeiture entry. So the failure should be at the stage where the premium was supposed to be received. Second thing, the reissue also there was extra amount collected, that wordings has to be read correctly. And third thing was that use of the formula. I had that formula and apply it systematically. You will be able to find out the proportion amount. Don't transfer the entire amount because there is still unissued forfeited shares of 10 which is still there with the company. So the forfeited share account will have a balance equivalent to that particular 10 shares. So I hope the concept of forfeiture reissue was clear to you. So thank you for joining me today. Please stay tuned for another interesting session on this ACE accounting series.